Okay, so as I was saying, we'll be starting our session today on support and resistance. So let's begin. Candles, candles. What are these candles? So we've already learned most of the things we'll be doing today. And we've gone through how to use TradingView, we've gone through how to use MT5. That's the most important aspect of this forex trading. Okay, so yes, as I was saying, we've learned everything about MT5 and TradingView already. So now we are on candles. Now, what's basically candles? So when we're going through TradingView, I showed you what candles were. Candles are the price distribution in a particular time frame. They give you information such as the high, low, open and close prices at a particular period. Candles give out a lot of information. An example is a bearish candle can tell you where sellers were strong in the market, and a bullish candle tells you vice versa. So we've basically spoken about most of this already when we're doing the trading view session, but we'll go over it once more. So look over here, you can see my trading view screen. These are candles. My blue candles are my buy candles, and the black candles are my sell candles. It's up to you to choose whatever color you want. If you want to know how to change this color, you can go back, I think, to last week's session as part of the playlist and know how to navigate TradingView. So let me open a random pair. What they are saying is all these oh, I don't want to open this. All these candles have meaning. I want a new pair that has nothing on the screen. Okay, let me see. Okay, I don't trade NQ. I'll go for NQ. Okay, so yes, all these candles have meanings. Now, this black candle tells us a story. This blue candle or this bullish candle tells us a story. So you have two types of candles. You have bullish and bearish candles. Bearish candles are like bears. They are always facing downwards, and bullish candles are like bulls who are always facing upwards with their horns. So what we are basically doing is that every candle has a meaning. When you see a candle at a particular area, it tells you something, tells you a story. Now, this candle here has a open, a high, a close, and a low. Now, if something is selling, it will definitely have to start from the top. So in this scenario, this area, around this area, let me draw a line. So around this area, let me get in a little zoom in. So around this area is your open. That's where the candle initially opened, around this area. Then the candle went a little higher. That's why we call it the high. So the candle opened here and went up, but when it got to the top, it couldn't sustain, so it came back down. That's why there is this wick. So wicks are made by price actions that were not permanent, but they were temporary. So it created this high by going up and returning down, and created all this volume down. So all this thick area is a permanent area for price that has been covered. Price continued downwards until it got to this tip. That's what we call the low. But price also wasn't able to keep that as a permanent price, and price retraced a little back to this place, and price closed here. So this candle is telling you that sellers started entering from here. Buyers, a little buyers came in, buyers from the other side came in, and sellers have been dominating afterwards. Now look at this candle. This candle tells you a different story. This candle tells you that buyers opened here, and at the same time that's their low. That tells you that the candle is very strong. A candle where buyers, or a candle where the particular participant opened and created that as an high or a low, is very strong. So if you look at this candle very well, it opened here, and at the same time that's the low of the candle. There are no wicks. Price just left, buyers just came through. So it means in this candle there were no sellers basically anywhere around the open. So buyers bought till they got to this high and said, no, we can't go that much more. Sellers were not willing to let them go much. So sellers came in and sold them off to this point and they closed. So that's basically what the candle tells you. Every candle has a story. You can sit around and take notes of these stories. You can create your own stories out of them, but your story is definitely going to be true. Look at this candle, for instance. It opened from the top because it's a sell candle. It sold all the way to this place, but buyers said no, and buyers came back to cover everything up and close there after they continued with the momentum to the side. It's as simple as that. Every candle has a story. Every single candle has a story. So that's it about the candle aspect of this. We can continue with our candles. So I've already spoken about what bullish and bearish candles are, basically, because I said a bullish candle is the type of candle that shows price distribution to the upward. It's buyers. Buyers use bullish candles. As I said, bulls have horns that are facing upwards. So bullish candles are candles that are showing willingness to go to the upward direction of price, or are showing willingness to buy. Then that's the same for sell candles or bearish candles. This is an example showing you how the bullish candle looks like. I've explained this on trading views. As you can see, it has a high, has a close, it has an open, and has a low. The open, because it's buying, it has to open from a lower price and go up. So the open is below, and the low is when price or sellers make price drop permanently to a point and retrace back up. So this is a wick. A wick, as I said, is just a temporary price movement. It's not permanent. The body itself is the permanent price movement, and the wick of the high is also not a permanent movement. It's just temporary. So take note of this. It's very important you know this. It's not really needed in our trading. It's not something we stand on to say, okay, we want to use the open, close, or high to enter the trade or anything. No, but you need to know this as a forex trader. There are some key things you need to know as a forex trader, and this is one of them. So the next one is also bearish candle, which we've basically spoken about bearish candle already. It's the same thing. This type of candle shows price distribution to the downward direction. That's the typo. It shows it to a downward direction. Most informed traders price wants to decrease in value. That's a high, low, open and close. That's true. So there are just some tweaks here. Here the upward and the increase, it goes downward and decreases in value. So the next picture is an example of a bearish candle. This is a chart from last year. I was using this chart from last year. I think it's blue and black. I've changed the chart colors. Whatever makes you interested in trading is what you're supposed to do. So yours will be showing green and red. Go and watch the trading view or the trading application part 1 so that you can know how to navigate your trading view very well. Now trading view also has an update, so you might find things a little difficult, so it's good to watch the new video so you can understand how these things work. Now it has a high open, of course, it's selling, it's a bearish candle, so it has to start from a higher price. If things have become cheaper and they're reducing them, you start from a higher price. So that's the same analogy that goes on here. You have a high, you have a open, you have a close, and you have a low. Open and close are the bodies. High and low deals with the wicks. Please pay attention to this very much. You need to know these basics. These basics are very important. You need to know them. Support. Finally, we have now gotten to um, the main topic of this session. What is support and resistance? Now, price action basically deals on support and resistance, saying that at a point, price acts as a floor, and at a point, price acts as a ceiling. That's the easiest explanation to support and resistance. So, what's happening in support? What they are saying is when you get to a particular price level, price just doesn't want to go down. Price just doesn't want to go down in the sense that there is a floor around that area. So you can use your room as an example. If you have a ball and you throw the ball to hit your floor, it's going to bounce back upwards. So what does support mean? Support is a key deal for buyers or bullish participants, where they believe that in a particular area, that area is acting as a floor. So anytime price gets there, price is going to bounce back upwards. That's what support is saying. So what do we have here? Support, as the name implies, is a point in the market where there's a virtual piece of block that stops price from moving further lower. Yes, as I said, if you bounce the ball on the floor, it's going to bounce back up. Buyers believe that at that particular area there is a floor, there's a virtual piece that is going to stop them from moving further lower and going to bring them back up. And this can signal a buy move to the upside. Support can come in many forms, either through trend lines, horizontal supports, bearish or bullish candles, and moving average support. Now, moving average support, will be taking that deeper when we are going to be doing indicators. We'll have a session for indicators maybe in the coming weeks, so you have nothing to worry about when we talk about moving average supports. But for bullish or bearish candles, we know what bullish or bearish candles are already. We just spoke about candles. We'll learn more about trend lines, and we'll learn more about horizontal supports. So an example is, let's say Euro USD has fallen several times to 1.050, but each time it hits that level, it bounces up. We can agree theoretically or visually that 1.050 is a support level, meaning that it's a block where anytime price gets there, price wants to bounce back higher. So this means that 1.050 is acting as a support level. Buyers are consistently entering around that price. Now, going further more, I told you that we'll be learning price action, but we'll be going against price action at a point. Those who joined the Saturday interactive session understand what I'm saying. So if you need to join the community, I'll leave the description in the comment section, or I'll leave it in the descriptive section so you can contact me. Please do also like whilst you are here so we can keep growing the community. So as I said, support basically is a piece of block that is going to bounce you back upwards. Now, this is a typical picture of a support, but we can go into trading view and get a clearer view of what a support is. Now, even look at this particular chart, look at this area. I can call this area a support. So I can call this area a support because when this price got here, when price came down from this area and got here, price did what? Price bounced back upwards. So I can call this area a support. This area is a support. I showed you how to use the tools on our last two sessions. That's the application. If you don't know how to use this tool, if you don't know how to get the tools to the top, kindly go and watch the video. The YouTube link is still active, the videos are still there, so kindly watch the video. So as I said, I can choose this place as a support, meaning that when price got to this level, price bounced back upwards. It's a support. Anywhere you get a bounce, it's a support. But the thing is, we have categories to pick out our supports. We have baselines to pick out our supports. You just don't pick anyone as a support. Now look at this, for example. When I picked this area as a support, it didn't act for long. It didn't react for long. It reacted for just a short period of time. That's 1, 2, 3, 4. It just reacted for 16 hours and came back down. You see, so it's not everywhere that's a support. There are great support on your charts. You have to look for them, but we'll be having a way to get your support and resistance. You have no worry about that. There are no two ways about that. So we are trying to get some of the support from this chart. Let's see what we can get. Support. This is NQ. That's the mini futures for Nasdaq. I'm trying to look for a support on this chart. This chart is in a trend, so it's quite a little difficult for support, but okay, let me use USDJPY for that. I know there are a lot of good. Now you can get support from here. Look at this. When price came around this area, it bounced for the first time, so you can choose. I showed you how to use the magnet tool to draw perfect drawings. So that's simple. Yes. Now, as you can see, price reacted around this area once the first time, did it the second time, so you can presume that it's going to happen for the third time. And what happened? When it happened for the third time, price went to the upside. It acted as a support. It didn't only just act once, it acted more than two. It acted once, twice, thrice. It happened like 4 times before it's finally getting broken. So you have to know how to identify good supports and good resistance. That's not a problem for now. I just learned what support and resistance are. We'll have a discussion deeply on it. So we can continue with what we are doing. That's what support looks like. Now, when we move on to what resistance looks like, it's this, the opposite of support. Now, we already know what resistance is. It's acting as a ceiling, meaning that anytime price goes up, it can't break the ceiling. If you throw a ball to your ceiling, it's going to bounce back down. That's what resistance is doing. So forex is a two-way deal. If it's not A, it is B. If it's not buy, it is sell. If it's not sell, it is buy. That's what's happening. If it's not support, it is resistance. So resistance is basically like support, and let's go deep into what resistance looks like on a chart. Let me see if I can get a quick resistance. Okay, I think gold is selling. Gold has been selling for some time now. Oh, I'm in a sell trade. Okay, I think I'm trying to place a Euro USD sell trade. Yeah, it's already dead, but the trade is already dead. Okay, now look at this area here. Look at this area here. Price reacted to it the first time and reacted the second time. So this first one, I told you to get a perfect draw and use a control which acts as a magnet. So I use the control, get both sides. So first, price acted, reacted. First, price reacted to this this area which was acting as a resistance, and I extended it and you saw it happening again. So price came to that area twice and reacted to the downside. That shows that that area is a resistance area. So we can assume that in the near future price will do what, get to that area and react from it. Now, you don't just create support and resistance areas. There are criteria to use to create support and resistance areas. We're going to be discussing about that, so you also have nothing to worry about. But for now, this is what we are trying to explain to you. There is support, there is resistance. Resistance is where you get and you realize that price doesn't want to move any further. Price just wants to bounce back down. And support is where you realize that price doesn't want to move down either and wants to bounce back up. So that's it about the support and resistance. You can continue. Then trend lines. Now, if you look, when we're talking about support and resistance, there were methods in it. You saw trend lines. Now, what's a trend line? So imagine you're on TikTok or you're on any social media and you realize that there is a new trend, there's a new video, or there's a new dance. If you try to follow the trend, you're going to see more of the dance videos. You're going to get more of the dance videos. The videos are going to continue. An example is Shakiti. That video, if you go to your trends, Shakiti will just keep on coming, keep on coming, keep on coming. That's what's happening here. What's a trend line? And trend line is when you have a particular market or a type of market for a long period of time. So we have three, but we're going to discuss about two because we don't like the third one. Now, the first one is an uptrend. That means that price is printing on the chart, a chart that's diagonally going up, and we have a downtrend that's diagonally going down. And the last one is a ranging market. It's basically not going up, it's basically not coming down. It just goes up and comes down, goes up and comes down, creating something like a box like structure. So, what's a trend line? A trend line is a straight line drawn on the forex chart that connects two or more price points and helps traders visualize the direction and strength of a trend. It acts as a guide whether the market is in an uptrend, downtrend, or a ranging market. Now, we have types of trend lines. We have two main types of trend lines. We have three, but I said we are not going to be discussing about the first one because it's not really that important to us. So we have an uptrend and we have a downtrend. Now, as I said, uptrend is basically going to be going to the upward direction diagonally, and downtrend is the opposite. So let's look at this. I think I have a picture how to draw. That's the problem. So it's just like the support and resistance, but this is trending to the upside. This is support trending to the upside. As you can see, forget about the support for now, just think about the trend line. You can see that the line is connecting the dots to the upside. It's going diagonally up. That's an uptrend. When it's doing the opposite, you call it a downtrend. So you see what's happening. It's doing basically the opposite, coming to the downward direction, joining points together. That's a downtrend. Now, we only add support and resistance to trends when we want to trade. But for the trend is just connecting the line, showing the direction the market is going. So what can we make out of trends? We can deduce a plan out of the trend. Now, anytime I see a market that looks like this, I won't be looking to buy any of the pair. I won't be ready to buy. I'm not willing to buy in such a market because I can see the price keeps on going down. It's in a downtrend. I'm not willing to buy in a downtrend. It's the same for an uptrend. You should not be willing to sell in an uptrend. You can get short sales, but it's not really. I won't advise anyone who is in an uptrend to be selling. Yeah, you should very, if you are going to be selling, you should be very cautious of whatever you want to do. So that's basically downtrend and uptrend. Let's try and see if we can get some on our charts. Gold is in an uptrend. That's simple to get. As you can see, this is a steep trend. This one is an uptrend. This is a steep trend. So you can see I drew the line and it's showing price going to the upside direction. Now, in such trades, all I'll be willing to do is get buys. All I'll be willing to do is get buys. I don't want to get any sell in such a trade. I don't want to get any sell in such a trade. So for trades like gold, you try to check what type of trend you are in before you place the trade. So you don't have to enter any sell trades on gold. Now let's see another one that's selling. AUDJPY is going down currently, but overall then an uptrend. Now if you want to know the overall trend, you use either the daily or the 4 hour. Don't use 15 minutes to look for your trend. No, per what we'll be learning, we are not going to be using 15 minutes to look for trend. Now what's 15 minutes? For those who don't know, it's your time frame. I've already done a video on it. It's in the playlist, so go and check. It's application part 1. It's on the playlist. Now you don't use 15 minutes to look for the trend. If I go to 15 minutes for AUDJPY and AUDUSD, it will be selling. That's what I was saying. If you go to the 15 minutes, it will be selling. Someone will just come and draw the line here and say that the market is selling, and end up losing their trade. But you have to check the overall trend on the 4 hour or on the daily. Now this is not very clear, but if I look for other trades, you realize that, come on, good. Look at this area. Look at this area. You can draw a trend line to the downside and see that this is in a downtrend because you checked it on the 15 minutes. Meanwhile, that's not what's happening. It's on the overall time frame is buying. It's not selling, it's buying. You go and sell and you end up losing your trade multiple times. You might be able to catch these small moves, yes, that's true, but it's not safe. You don't know when the move is going to go against you. Maybe this was a one night wonder. If you go back to previous times, this is not what's going to happen. It's just going to come down and boom, goes to the top. It does not do all these little also price movements for you. So you try to keep away from markets that are not favoring your trade. If you're in a buy or if you're in a uptrend, you look for bullish trades. If you're in a downtrend, you look for bearish trades. That's even going to make your trade profits come quicker. You're just going to hit your TPs faster than ever. So go back to the 4 hour. Yes, that's that part about the trend lines. Then we move on. Trend lines, order blocks. Now look at order blocks like this. So you went to a shop to go and buy foodstuffs, but when you go to the shop, the woman said she has just 10 pieces of what you want, but you wanted 100 pieces of it. So the woman says, okay, let's do it this way. I'm going to give you 10 pieces of it now, and you are going to pay for all the 100. But the time you come for the remaining 90 pieces, I'm going to reduce the money for you and give you a commission on it. That's what other blogs do. Other blogs fill price for you, but they don't fill them completely because institutions don't have time to wait for all the trades to accumulate and place the trade on the trading floor. That was I was saying for EC markets has to place 100 people's trades, but when they got there, they couldn't buy all the 100 at once. So EC market is given a proposal to pay for all the buy trees they want, but they're going to get the remaining 90 at a different time for a lesser price. So when EC market comes back at that lesser price, they give EC market a commission. That's what other blocks are doing. Other blocks are simply your candles acting reacting very fast to particular price areas. So an order block is a cluster of orders that causes a significant price movement, usually created by institutional traders. Yes, the big banks, those are the institutional traders. When price returns to this zone later, it often reacts again because on failed orders, as I said, you wanted to get 10 of the item, but you got only 10. You wanted to get 100 of the item, but you got only 10. So you're going to be filled the 10 at the same price, but later come and fill the 90 at a different price. So that's what's happening. Order blocks are the last candles before an impulsive move, either up or down in the market. Different traders have ways to determine order blocks. You can find out which one is best for you. We already have which one is best for us, so we have nothing to worry about. But for now, let's go through the order blocks basics. So our chart, order block. Now, this trade of mine is void. I've not placed this trade. Um, Later in the day, I realized it's a void, so I'm not going to place this trade. I just have it on the chart to track whatever I'm going to do. But there's a void trade. Let me go to a different market. I had this BTC sale yesterday. If you go to our Telegram community, I've posted the picture on the community. Um, we have different ways of determining the order blocks. Now, order blocks are just candles, but they are the last candles before impulsive moves to the upside. Now, let me clear. So let's look for different types of order blocks as scenarios. Look at this. The last candle before an impulsive move to the downside or the upside. Look at this candle and look at the next candle. This candle is relatively small. Look at the body of the candle, relatively small as compared to these two big guys. These guys, they can humiliate you. Look, this candle's body is relatively small as compared to this whole candles. So you're going to take this area as your order block. Control to make the magnet work. Control at the top to make the magnet work, and you extend it. We've spoken about this on TradingView, so please go. If you don't see the shortcuts, please go so they can help you, because sometimes if you manually do it, it's quite difficult to actually get the correct area. Let me give an example. Look here, you see I left a small space below. when I was drawing it manually, I left a small space beneath when I was drawing it manually. So I also left a small space at the top. So you need to use the control to act as a magnet for you, so you have nothing to worry about. Look at how perfect this is. Exactly on the line, exactly on the top. So as you can see, this is an order block, and price reacted to the order block. So the order block can act as a support or a resistance to you because there are unfilled orders there. So price has to come back and fill them. So I bought 10 pieces of something. I didn't get all. So I have to go back to the woman later and get the remaining 90 and go back to my home or my hostel or wherever I'm going to. So that's what's happening here. Price gave him a short notice, and price and he left. He came back to take his remaining items and he's leaving again. That's what's happening. So this happens in both ways. It can either be a buy, it can either be a sell. Let's look for more order blocks. All these areas are basically order blocks. Look at this here. You can see you can see this last candle before this gigantic move to the upwards. Now after it moved, it came down, sellers came in control for a little while and continued moving back upwards. So it's telling you overall that there are some orders that are unfilled here. They didn't get time to fill all of them, so price just moved away from the market, or moved away from the price. So what happens? Price is going to come back to that direction to do what? To fill them before price will continue moving to the upside. So as you can see, after price filled it continued moving to the upside until it got to a place and said, okay, I think we are cool here, and price decided to come down once again. Now BTC is decentralized because words or actions of people can control it. And what's decentralized? Decentralized are currencies that don't have one data com. That means that they don't have one um, area where we all come together and say, okay, whoever is buying has to come here to buy, whoever is selling has to come here to sell. BTC can be controlled by anyone. BTC is going down basically because of the Epstein Pharisees or whatever it is. People claim BTC is going to go to 50K. We don't know about that for now, but we wait to see. Um, BTC is decentralized, so it moves anyhow. Anyone can talk, and BTC will just go to the upward direction. So we learn about news under the markets. We'll be learning. Um, Come here, hold on for me. We'll be learning about basically news sometime next 2 weeks or so. So you have nothing to worry about. You get to understand all these things I'm saying, where somebody can just talk and BTC will sell, somebody can just talk and BTC will buy. So let's continue our order block. So that's basically what an order block is. A price action where price left the area in a sudden movement and will come back to be filled again. Now we have bullish or bearish order blocks. I showed you a bearish order block is I showed you another block that makes a support, that makes a resistance. So that's a bearish order block, and a bullish order block is the opposite, that makes a support. So this is where we'll be ending today's session about order blocks. We'll just have to go through whatever we did again on trading view so we can recap. So let me look for a new pair. um, let me just look for something neutral. I don't want BTC. A pair nobody cares about. Apple, you can use Apple. A pair no one cares about. So yeah, Apple has these unfilled gaps. Let's not use Apple because we don't want inconsistency. Forex, close this, and we've already learned how to use all these. So please, if you are still finding difficulties understanding why I'm using, you watch the trading applications part 1 video. It only talks about trading view. The part 2 talks about MT5 NXDJPY. You can close this. Okay, then let me make the chart come back to the top. We learned that there are um candles, and every candle has a meaning, every candle has a use. Now every candle has a meaning and every candle has a use. Now look at this candle here. It's acting as a support. Look at this candle here. It's acting as a support. It's acting as a support. At the same time, it's acting as an order block, because this was the last candle before an impulsive move to the upside. Now, this impulsive move to the upside is very significant. It's a very significant move to the upside. So we take all this into consideration. Very wild move to the upside. So this was acting as an order block, and price came back and went to the upside. Now you could enter from the top, put your stop loss right below, and take it to the next side. This is just giving you a 1.8, which is not acceptable in DanTrades. The minimum we look for is 1:2. That's the minimum we look for, and mostly we'll be trading 1:2. If I adjust this to 1:2, it's going to be 1:2. But I'm trying to let you know that we have areas you have to put your TP, and if it does not show 1:2, it's either you don't trade at all or you risk it. And I hate people. I don't like the idea of you risking your money for something that is not going to happen. So we are not going to be doing any risk job here. But fortunately, this gave a 1:2 and went to the clear direction. Normally, it should be just at this high and hope to get a 1:2. If you don't get a 1:2, you leave the trade. Yes. Many other. Look at this area. There was this move before an impulsive move to the downside, and boom, price came back up to react to it and went down. Now, I'm not saying you just wake up and pick any other order block. That's not what I'm saying. I'm just showing you how you get your order blocks on the chart. It doesn't mean just wake up and go and select that area as an order block. No, no, not at all, not at all. That's not what I'm trying to say. But I'm trying to let you know what the order blocks are. You can see small candles before impulsive move ups that don't work. Look at this. Look at this candle. This was a small candle before an impulsive move up. You can use this candle to, but what happened? It reacted and didn't get anywhere and came back. It just gave the reaction. There are criteria you're going to stand on to be picking your order blocks, and there are criteria you're going to stand on to be picking your support and resistance candles. So what I'm saying is, stick to this for now. Understand what is happening, understand the order block, understand the support and resistance, and we're going to continue in our next session. Once again, thanks for joining today's session. Please like and subscribe. That I need that very much. Please like and subscribe so that our community can grow. It is very important for all of us to support our own and get everything under control. Once again, thank you for joining DanTrades.